Okay, the market is definitely turned around, and how you're with us here on a fresh new edition of Midcap Radar. Take a look at what's going on, and it's not just actually here in India, which actually where the markets at the day's high, but around the region. I mean, you could look at Asia, you could look at the US futures, you could look at currencies. Everywhere there is a turn and a strong turn, which is visible. Europe will start trading in just a bit, and we'll sort of track that closely. There is no real reason. I mean, I can't give you one reason why this change in mood has occurred. But, well, that's markets for you. It is happening. And that's the first rates on Europe coming through. And there is a bit of green there as well. FTSE CAC, I mean, green is good to see. We've been seeing red across global screens for the last couple of days. So here's there is some positivity coming through. I mean, the big one to watch, of course, is US, because that's where the maximum pain has been felt. The futures index is now up, S&P 500 that is up about 1% as we speak. With me is my colleague Anisha. Anisha, hi.
Hi Prashant. Well, yes, the US futures are suggesting an uptick of around 150 to 200 points. Looks like Europe has started well off in the green, with most of the indices showing an uptick of anywhere between 0.5% to 1%. And even in the Indian markets, a lot of these heavyweights are actually moving higher. Of course, it's the Nifty Bank that is really leading the charge. That index is up around 1%, almost a 300-point gains when it comes to the Bank Nifty. And ICICI Bank as well as HDFC sitting at the high point of the day and leading from the front. We'll discuss all that and more later on the show. First up, the top headlines. Key indices shrug off morning weakness. Nifty, Sensex gain over 0.5% each as Dow futures indicate positive start for Wall Street. Financials like Axis Bank, HDFC and SBI lead the Nifty higher. Midcaps trade in line while the Nifty Bank soars 1% higher.
The rupee strengthens to trade below the 70 against the dollar mark. IT stocks are the top Nifty losers. TCS, Infosys, HCL Tech lose anywhere between 1% and 2%.
Bond yield spike hit a 3-week high of 7.46 as crude prices rise and fears of a farm package persist in the market.
Tata Motors amongst the top Nifty gainers, while Tata Motors DVR also gains an otherwise tepid market. JLR US sales have come in higher by 24% in the month of December.
And ahead of a crucial Fed chairman speech later today, Chris Wood of CLSA says that monetary tightening expectations in the money markets have reduced considerably over the past quarter in response to the increasingly negative stock action that we have seen in the stock markets of late.
Okay, so that's the headlines for you. You know, the PSU Bank stocks all were at the bottom of the screen. It's showing up on the PSU Bank, the Nifty PSU Bank index, which is up 2.5%, and it's the top gainer, the top gaining sector in the market at this point in time. The top gainers are Syndicate Bank, 3.6%. If you could put these up, PNB is up 3.5%, Union Bank is up 3.25%, Allahabad Bank is up 3%, Canada Bank is up 2.75%. SBI is up 2.6%, and then you got Bank of India, Andhra, UCO, etc. in the 2.5% range. So across the board, there is a fair bit of green on the PSU Bank space. Actually, I think I can count one name, two PSU names, PSU Bank names in the red. Otherwise, all of them in the green right now. Ashwini is with us as always to take us through what he's making of things. Ashwini, 62 on the Nifty now, 10,735. What would you do? And are you surprised by this move that we're seeing?
See, I think that there is some macro tailwind which is happening on financials, and the news that came in at 10:30, 11, that is responsible for it, because, you know, to some extent it is the global cues, etc. But the way banks are behaving, you know, PSU banks, smaller banks, larger banks, I think everybody is expecting something to come from NCLT, etc. So that way, I think the banks will again outperform, and you know, Nifty is a fairly mild rally, but by the end of the day, you know, these banks can easily make another 100, 150 points on the upside. So yeah, basically 10,750 once that is crossed on the Nifty, the market should be back in an uptrend, and there is a high odds of that happening given the way these banking stocks are moving, because they tend to pull up all the other stocks with it. So still next couple of hours, you could see the biggest gains of the day. Having said that, and having recommended banks all day, I think now PNB is a buy with a stop of 78, target of 86. Coromandel International is a buy with a stop of 455, target of 480. And Union Bank is a buy with a stop of 88, target of 96.
Okay, Ashwini, actually, let me just ask you a little bit about Yes Bank. It was remarkably resilient through the course of the last 2 days or so when the market was coming off sharply. Any thoughts specifically on that?
Well, today it's up 1.5%, and I mean nothing significant. But you know, as a corporate lender, this news should impact even Yes Bank. And now, you know, I think 170 has held for a while. So as banks move up, possibly even this one could get up to 225, 230.
Any thoughts on all these mid-cap IT, Mindtree, Persistent, Emphasis, all down, Cyient, anything down, anything between 2 and 4% lower?
See, the issue is the rupee. Even if they do rise, they'll probably lag the financials. And if rupee continues to appreciate, life will be difficult for IT stocks. I think for the moment, you should focus on the domestic-oriented stocks.
Okay, Ashwini, any disclosures you would want to leave us with?
We have Bank Nifty long positions as well as some of the individual banks.
Okay, Ashwini, thank you so much for joining us with that technical analysis. But let's move on. It's a lot of the global markets that are really recovering. We saw the recovery in Asia, and European markets have opened rather strong. All the key indices up around 1%. But let's move on, and Bruno Vistrate, the partner of Lakefield Partners, joins us on the show to discuss more. Bruno, thank you so much for joining us, and good afternoon. Well, the street is watching out for that speech which is expected from Fed Chair Jerome Powell after he meets with Janet Yellen. And Ben, what are you expecting? Because the street is working with some sort of softness coming in its commentary regarding the rate hikes.
Yes, good morning. I think indeed the Fed plays a really crucial role in the whole managing of expectations, because I think what the market is saying now is that we are really into a recession mode, which is not in the numbers yet. I mean, of course, the growth is going to slow down. That is clear from all the numbers. Also, the warning from Apple yesterday show that the economy is slowing down, but it doesn't mean that it is in a negative territory yet. So we do not have a recession, and I don't think in the next couple of months we will see a recession in the U.S. When you then see that December was the worst month since 1931, and you look at the economic circumstances back then and now, I think there's a big gap of reality versus what the market believes the reality is. And I think that is what the Fed needs to manage somehow, and to say that things are good. But of course, if it is said, it might not be believed by the markets at this stage until hard numbers roll in.
Bruno, any reason for this turn in sentiment we're seeing across markets right now as we speak?
Today?
Today, yes. I mean, equities in Asia, Europe's opened higher, currencies are recovering.
I think there's a few things still pending which will have to be resolved very soon. One is Brexit, clearly. The second one is the trade war, and I think there we had some good news again. There seems to be willingness from the U.S. again to meet up with the Chinese government to discuss it. It is clearly something that is affecting the markets and might, to a large extent, be the reason for the profit warning of Apple yesterday. So I think there is a clear urgency to deal with that matter. And then, of course, the government shutdown, which eventually is going to hurt the economy as well. But we're not there yet.
Okay, Bruno, and if I remember it right, your call was that in 2019, the emerging markets will outperform the developed markets. Does it still stand? And where does India stand in all of this?
I think it still does. Looking at the growth rates, clearly there's a dynamic inside of the emerging markets, which is much stronger and does not go along with the geopolitical pressure and tension that we see in the Western world. So I think, given the growth rates and given the fact that these markets have suffered quite a bit in 2018, I think this is really still a strong buy. In which sectors, that remains to be seen. Clearly, I think the more domestic sectors would benefit more from this internal dynamic on the consumer. the big exporters would be affected much more on this trade war going on. So I would rather go for, the smaller companies within the emerging markets. Okay,
this speech later today, the Fed chair speech, we had Mohammed Al-Erian saying that Mr. Powell needs to, in his speech, assure the market that the option of, reversing from quantitative tightening is very much on the table. It's possible. I mean, it's not on autopilot, and they will react to market conditions. And that is very much required to calm market sentiment down, equity market sentiment especially. Do you think that is possible, or is maybe asking for too much? What's your sense?
I think it would be rather a sign of weakness, because then the market would perceive it as, the circumstances are much worse than we thought, and I think the sell-off would continue. What they need to show is that they're going to continue into a normalization, building up enough ammunition, normal ammunition, so to speak, monetary ammunition, to lower the interest rates once the economy slows down, and to get back to a more normalized state. Because in the end, you cannot, for eternity, have quantitative easing. You need to
right. No, Bruno, my point is, in terms of communication, is what can they say to calm things down? Because, I mean, it looks like either way, it's not going to work.
I think business as usual, but perhaps with a bit slower progress. I think that would be the right message, to say, look, we have seen the slowdown in the numbers. It's not as bad as it is. So instead of increasing the interest rates three times, we'll do it only 2 times. We are aware of the situation, but we're not going to go back to extraordinary measures because it's not needed. I think the moment that they show that it's needed, markets will see it as a very bad sign.
So, Bruno, what is your own expectation of the number of rate hikes in 2019? And separately on crude, now that one keeps on throwing these big moves at us. Right now, it's racing towards the $57 per barrel mark. Do you think it is partly on account of currency, or do you think that sell-off that we had seen earlier on crude was overdone?
I think it was, to a certain extent, overdone. It's clearly something which was on the supply side. It remains on the supply side. And it is something which the markets are overlooking big time. I mean, the impact of the lower oil on the economy within the next 6 to 8 months is going to be visible, and that is not discounted yet into the markets. But clearly, I think it is overdone. The economy is not in such a bad shape. The supply side, also influenced by Mr. Trump, is clearly pumping more than is needed, and that is putting downward pressure. But that will revert at one stage once, again, the real numbers are visible and that the demand is shown as well.
Got it. Bruno, thanks very much. Appreciate you joining in with that quick perspective. So, I mean, 51 points still on the Nifty. I mean, the gains are not building on anything, but it's a huge, sharp recovery from the day's low that we saw earlier. We will play out some more opinion for you. We spoke with B. Prasanna of ICICI Bank. He says that the market's been preparing for a global growth scare over the last between 15 and 20 days. And he says that there are a couple of things that the Indian market will be watching out for: stability in oil, US Fed Reserve action, and of course the local fiscal arithmetic. Listen in.
There has been a global growth scare that the market has been preparing for over the last 15-20 days. The expectations of rate cuts are actually starting to feed into the market as far as the Fed is concerned. And from discounting 50 basis points of rate hikes around 40-45 days ago, they have actually now started discounting a probability of a rate cut by April of 2020. So that's the next move that the market is discounting. So yes, there is a very benign global bond market environment that is developing because of the fears that the growth in the global economy is going to slow down next year. There will be a steepening of the yield curve. The short end will maybe come down, and the long end would possibly either be where it is or might be a slight hardening depending upon how much borrowing comes through. So to give a range right now just before all these noises are subsiding would be very, very difficult. It could actually go all the way from 7 to 775 depending upon how fiscally prudent they are versus whether if they actually borrow a little bit more. The three things that the new governor and the MPC would look for is stability in oil price, and the way the Fed is going to change its outlook and whether it's going to slow down. And the third, very important, is the fiscal arithmetic.
Okay, flashes at the bottom of your screen that Bank of Maharashtra has approved raising equity capital of around 4,500 crores. So that is what the stock is reacting to, up around 2.5%. But on that note, we'll slip into a short break. Up next, we focus on the sugar stocks in the backdrop of the UP government in favor of a 12% hike in the MSP prices of sugar. Stay tuned for that.